let me take you to a very important indicator, which is the um, momentum indicator. Now, momentum indicator is something which is really preferred by the trader community. Any clue why do you think, or why do I say that momentum indicator is really preferred by the trading community? Any guesses? Why do you think so that I say that momentum is important? Easy? Not really, Nirav. Everything that's easy to follow. Not really. Momentum drives trend. That is true, but that is not the only reason why it's so preferred. It is very true that it drives the trend up or down. Demand in multiple of supply, not really. Okay, let me draw something. Let me show you. Let's say if I ask you guys, what is this? Balraj says it's a circle. Look closely, Balraj. It's a little more than just a circle. It's a cricket ball. All right. So we all know how a cricket ball looks like. So imagine you take this cricket ball, you go down to the ground, some park, some ground, and you throw this cricket ball with all your strength up in the air. All right. You throw the cricket ball with all your might up in the air. The moment the cricket ball leaves your hand, it starts to go up really fast. Every incremental inch is covered really fast by this cricket ball. Then it reaches a certain height. It reaches a certain height, after which the cricket ball tends to go up, but then the pace at which it is going up actually gradually comes down. And then we reach a stage where this cricket ball of ours reaches a stage where for a fraction of a second it halts. Now let's look into two phases of this cricket ball going up. Phase number one is this one till a certain height, and phase number two is above that. Now in phase number one, when the cricket ball was going up, we can say that the cricket ball's direction is up, and the rate at which it is going up, let's say the momentum at which it is going up, is really high. But then when I go up to the second stage, I say that in this case the direction of the cricket ball is still up, but the momentum at which it is covering the incremental inch on the upside is actually low. And then it reaches a stage where for a fraction of a second, this poor little cricket ball has no direction, and this poor little cricket ball also has no momentum. I personally like this stage a lot, and I call this stage of the cricket ball that the cricket ball has reached a stage of moksha. I like this stage because this is a stage where the cricket ball has no direction in his life and there is no life energy for him to take anywhere. No one is throwing, kicking, or hitting the ball anywhere. This, however, lasts just for a fraction of a second. And then what happens is the direction of the cricket ball happens to be on the downside. If you agree to the little cricket ball story that I have told you right now, this is exactly what happens to price. How? Well, when the prices starts to rally, you will see that the prices starts to make higher highs, higher lows. They've gone above the average, etc., and they are on a rally mode. When you see that the trend has gone up, super trend is below, correct order, CCI above plus 100, things like that, that the question of your trend has been answered. So you ask what is the trend, and you get an answer that the trend is up. And then you ask the chart, the trend is up, what is the momentum? You would like to get an answer from the chart. And then the momentum indicator tells you either of the two things. The indicator will tell you I am with the trend or I am without the trend. With the trend is this phase. When the momentum is with the trend is going to continue. However, if the answer comes that I am without the trend, that is, the trend is up all right, but I am actually coming down, this zone gives an early warning signal. This zone gives an early warning signal that the market is going up all right, but it's not going to last long. On the contrary, it has high probability of coming down. So the reason why momentum indicators are so widely preferred by all of us is the fact that it is a leading indicator. As you would have noticed, it gives leading indication of what the price may do in the immediate future. In simple Hindi, I call this zone of the market as lene wala rally. So this point to this point, the trend and momentum are hand in hand. So this is a trend where you can buy. A rally, a breakout, a pullback is where you can buy. And this is the part where I call this is a dene wala rally. Means there is a rally, the rally continues, the price goes up, but this is where you don't buy, you actually use these rallies to sell and exit. The simple concept of momentum, with the help of this cricket ball story, if understood well, I will demonstrate, I will show you how to use them, how to ask the right question to the chart, right question to the momentum indicator. The indicator answers you your question and then you finalize your analysis. That is how you break down your analysis, right? So the indicator that we will be using for momentum is nothing better than the relative strength index. Though there are a lot of momentum indicators, but we will be using the relative strength index, and the default period of the relative strength index is that of the 14 period, 1/4. Before I go to the calculation and other things, let me first quickly show you how does it look like. Okay, so I'll keep this super trend in our com. Let it stay. We come to studies, we come to add, we type relative strength, and we come over here, which is the relative strength index. I double click on it. It by default it will give you 14 exponential 9. Okay, let me first show you how will the default indicator look like, then I'll make changes to it. This is the default look of an RSI. You see the white line, this is the relative strength index of 1/4 14 period. You see the orange line, which is a 9 period exponential average of the RSI. Like we plot averages of price, this orange line is an average of RSI. Now, honestly, this is something that we will not be needing or using. So what I'm going to do is change it to 1. And what happens is I have only the RSI. the 14 period RSI. I'll quickly do a quick experiment with you. I'm gonna hide the super trend. I will change the candlesticks to line, and I will request you to quickly check. Yes, this is the chart, and I will request you to quickly, let's say we come to this point. At this point, look at the price and look at the RSI. As we move forward, prices inch up or plateaus out, goes up, further up and down. Please notice, as I add one day at a time, the price changes, and please notice how does that impact the RSI. For example, what is the RSI doing vis-a-vis the price? How does the RSI behave as and when the price changes? Well, by now you would have made a conclusion that it mirrors the price. That is, it literally follows exactly the way prices move up and down, and it is as good as price itself. And this is where we are at the current juncture of RCOM. So can we all make a conclusion here that the RSI indicator follows price to the T? Each and every move, no matter how big or how small, is captured by the RSI indicator to the T, and it follows price really, really well. This is an observation which is true. The RSI is calculated in such a manner that it will always fall with the falling price and always rise with the rising price. But it is an oscillator, and that's why it is calculated in such a way that it can never go above 100. It will never go on the top above 100. Neither will it ever go negative, so it will never go below 0. So it's always going to stay positive within 100. That's all right. That is the way the formula and the calculation is. Now, RSI was developed by Wallace Wilder Jr. in 1978, and he made some observations. And because it is an oscillator, the observation number one that comes up is that of overbought. Look over here, over B, that is overbought, and oversold, that is over S. So the observation that Wallace Wilder Jr. made was overbought should be around 70 and the oversold should be around the level of 30. Okay, you would be probably aware of this, but let me quickly tell you what it means and what we should not be doing. What it means is when it goes above 70, look over here, right over here, RSI is 71. Look over here at this, on this day when there was good days for Reliance Communication, relatively better days for Reliance Communication. The RSI reading had gone to 71. Obviously, if you notice that the RSI indicator is rising, and we know that the RSI indicator will rise when prices will rise itself. So price was going up, RSI indicator was going up with the price, and it goes overbought. Overbought means too much buying has happened. So what should we do? If I ask you a question, if the RSI goes overbought, what should be your action? What should you be doing? Raju says sell. Amar says sell. Balraj says not buying. That's exactly what I wanted to know. Thank you, Balraj. Well, overbought essentially does not necessarily mean that you sell. Overbought essentially means that this is not where I should be buying because already the stock has moved up. Okay, if I have applied the same logic over here, and I notice that this is the price, a date when the RSI indicator goes oversold, falls below 30. So if I use the logic that it has gone oversold, so I should be buying. Now you keep on buying and the stock continues to stay oversold. You see, it stays oversold. So being oversold and overbought is not good enough a single reason to buy or sell. But what we read from this is, first and foremost, we should not be, if it's oversold over here, this is where we should not be looking to probably exit. If we get some signal in which we can short this strong downtrend, that is what we will try to capture.